Hello and welcome to Pro Trader Strategies Market Commentary for Monday, October the 21st. I'm Eric Wilkinson, and you might recognize me as Wolfman on mainstream media. But what I'm here to do is teach you not only how to build option strategies and trade those strategies, but how to implement those. That's the key to success with options, is the implementation of those option strategies, okay? Anyway, without further ado, most of that stuff comes in with the webinars that I do, not as much in the daily market commentaries because I don't have enough time to go into the details of that. But I do try and go over, assuming that you know some of the basic rules in and around my option strategies to move forward. All right, well, without further ado, usually we start these things off on a Monday with some economic data or any daily market commentary with economic data, but we don't really have anything to go on today. It's mostly news driven. Boeing, some internal emails got leaked and stuff like that about Boeing's problems, and that's causing about 100 points of negative value to the Dow Jones. Right now, Dow Jones isn't down 100, but it's causing that negative value associated to it. But anyway, so without any economic data, let's get on to the overall markets. We've got crude oil coming off just a little bit today. Later on this week, we do get crude oil inventories. Remember last week we saw crude oil inventories really build, and we're seeing a little bit of that follow through today. We've talked about this time and time again how the crude oil is going to stay in and around these mid to lower 50s. Feel like a broken record talking about that, but it is coming to fruition, so we are no worse for the wear on that. We're starting to see this volume node right here start to build up in and around these lower mid to lower 50s. I've talked about it before also that I expect this area right in here to kind of get filled in with some volume and time and build a larger volume node in and around this area, unless something crazy happens, but I don't expect to see that, because with the economic data that we've been getting, the economy is moving along at a decent pace. It's not robust, it's not really negative either. We're not seeing those recessionary key factors that some people were talking about earlier on. I said that we aren't seeing those here in the United States. We still haven't seen that come up. Yes, Europe is a little bit slower, but that also will cause crude oil to come off a little bit as well, as they have lack of demand going on over there. And remember, crude oil doesn't just put gas in our tanks, it also goes into the manufacturing process as well. So without very robust action going on in these manufacturing sectors, we aren't going to really see that demand for crude oil either. All right, we've got gold coming off a little bit. I've talked about this. I believe that gold is going to try to rally a little bit as the dollar weakens. We've got a lot of quantitative easing going on. We're also expected to lower interest rates by 25 basis points 10 days from now, at the end of October when the FOMC meets again. It looks like that 50 basis point cut is out of the picture. We're actually seeing some of that weakness show up in the bonds as well, of that pricing coming out. But gold off just a little bit. I don't really expect to see a massive sell-off here, despite the fact that we are above the value area high, which usually gives an indication here that the market is overextended. But you can see we've got a nice volume node going on right there, and that is the fact that price is being accepted here. We're spending a lot of time there, and we could start seeing relatively shortly this volume node shifting to the upside, which means that is a bullish sign of price being accepted at higher levels, and that it will be able to sustain that for a longer period of time. So it's a little ways away for us to see that really happen, but with the global uncertainty going on, people are going to be using this as a safe haven asset. All right, we've got bonds coming off. It's broken below that 160 handle. We are down by almost a full basis point right now. You can see it's 32 ticks is the full basis point. We've got 30 right now, and near the lows of the day. I was expecting us to sustain those 160s. So, this could be a product of the market just taking profit, taking some of that 50 basis point probability out of the Fed lowering of interest rates. But I do expect us to stay up at these levels for the foreseeable future, especially at least until the FOMC meets. All right, we've got the VIX. It's, unchanged, let's call it. It says it's negative 4.04, actually. That's pretty much unchanged. We are still in the teens, which is good. We want to see some of that volatility is going to hold on to these markets because of earnings, which we are in the thick of earnings right now. We've got tons of earnings coming out this week, tomorrow as well. And we'll talk about that going towards the end of this webinar here. But here you can see the Dow Jones is up by 50 points on the day. Again, we were in negative territory off the open. Most of that had to do with Boeing. You can see that we're starting to push higher. Boeing is the real drag on the Dow, though. We can see here with the NASDAQ up 60 points on the day, basically on the highs of the day. As soon as we opened up, we have seen a pretty sustained rally. And with that being said, overnight inventory didn't really get flushed out. So that is a pretty positive sign for the upside in the equities. We've got the E-mini S&P is above that 3,000 psychological level. But as you can see, as we start approaching this value area high, we've seen it in the past as well. We start losing a little bit of momentum once we get above this or up in around that area of 3,000. I think that the market really is trying to say, well, despite the fact that we are in 3,000, is the economy really all that great? And, this is a future, so it's forward looking. Is the future guidance that much better? Some of the earnings coming out, I think we've had, maybe close to 5% of the earnings being released already. And some of those are doing decent. We've seen most of the markets, especially the banks, do well. So that is bullish for the long term in equities. Let's take a look at the E-mini S&Ps overnight. This is what I was talking about. No attempt to flush out those overnight longs, and that is very bullish as well. When we see that happen, it means that the market is accepting of that bullish sentiment, which is going to drive this market higher. As you can see, we are on the highs of the day. Almost a new print here is a new high. So no real pullbacks at all, and not a big range either. Pretty decent volume, but it's on the lower end as we would expect for a Monday, and with no economic data out there. That is, to me, very bullish. All right, Chipotle is one that's coming out with earnings. I think it's actually tomorrow morning. The only one that comes out is Logitech tonight. I'm not going to probably trade that, but I'm probably going to be playing Chipotle to the upside. They actually started doing the new carne asada, which I think has been very popular and driving some of those customers back into Chipotle. So I think that that's going to be a big hit and push this market higher. We also have McDonald's. I don't think that the McRib has been out long enough to really affect their earnings, but I do believe that we are going to see more upside in McDonald's as well. As the economy is doing okay, people are going to continue to buy fast food in that type of economy. Really, recession is the only time we really start to see people pull back on spending money outside of the home, But one thing to note is the lunch time menu, which is McDonald's main customer, really doesn't have a tendency to pull back so much. Even in a recessionary time, people that are going to work don't often bring their lunches to work and go out to eat for that lunchtime. And McDonald's and Chipotle cater to that. So even if you believe that the economy is slowing and maybe recessionary, I think that people are still going out and buying that lunch at McDonald's and Chipotle. So I'm probably playing both of these to the upside. And finally, I think we got Procter & Gamble here. Again, Procter & Gamble has a tendency to beat on their earnings, so I'm going to play it to the upside. We did get a pullback on the earnings here, but you can see we got the pullback here on that earnings, but for the most part, they usually do very well on the earnings, as we can see on those two. So I'm going to go with the upside in all three of these products, and I'm not going to put a strangle on it, but I'll be able to get nice trade location on them, because you can see we've got pretty decent implied volatility percent. And when we see after earnings, we usually see those dips happen. So that's how I'm going to play it. That's all I got for you guys. Check out Pro Trader Strategies to get, or on Facebook, check out protraderstrategies.com on Facebook, because then you get early access to the market commentaries, and we are putting out a lot more content there. Also check out the webinar on Thursday. It's going to be a really good one. It's basically, we come up with an assumption, something like, if I thought I was long-term bullish in Procter & Gamble, how we set up a trade in and around that for that assumption, to make sure that we are implementing these strategies correctly. All right, that's all I got for you, other than if you can't take that, take it easy.